Friday, January 7th, 2022, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at the great wealth extraction machine, and that's the Federal Reserve and central banking for that matter, but we will focus on the Federal Reserve, even though I'd say the granddaddy of all central banks is the Bank of England, which was founded in 1694. But nowadays, of course, the Federal Reserve is the most important central bank. Before I go into the Federal Reserve, and actually I will recommend a few books as well that I think are essential if you want to learn more about the Federal Reserve and central banking. Before I do that, though, I like to introduce some of the new viewers to Billy. That's my dog. He's a Shih Tzu. Many of you know already about Billy, but someone asked me yesterday in the comment section, please introduce us to your dog. Well, yeah, he's Billy. He's going to be 14 in July this year. So we bought him in the summer of 2008, just towards the end of the summer, when the world was in a credit crunch. And our other dog had just died about 4-6 months before Billy, unfortunately. His name was also Billy. He was a Shih Tzu as well, and he actually looked very similar to this Billy. And yes, he died when he was 13 and a half, the old Billy. And we were looking for another dog, so I called a breeder near where we live, and I inquired, have you got any puppies left? And he said, yes, we've only got one. And I said, oh, that's good. And he said, do you want to know his name? And I said, yeah, go ahead. He said, Billy No Mates. So he was the only one left. And so my wife and I and my daughter went to have a look at him and most probably buy the puppy, buy Billy. And yeah, we fell in love with him. And the breeder actually was in a bind. His wife had just died. He had quite a few kids. He had other dogs. And he couldn't sell Billy because of the credit crunch. No one could afford to buy a new puppy at the time, or very few people could. Unlike today, where we've had a pandemic and the worst depression in 300 years, and people are buying dogs like it's going out of style, or puppies, which isn't a bad thing. I'm not having a go, but he was a bargain, I would say, in terms of price. And yeah, that's Billy's story. I started making these videos here back around late 2015. And my wife said to me, I don't remember exactly when, and I used to be at another position here in this study. We moved the furniture around a little bit. And my wife said, why don't you put Billy on the sofa during your videos? And that was a great idea by my boss, my wife, Mrs. Monaco 64. And he's become very popular, and he's got nicknames like the Credit Crunch Puppy or Billy Bullion. He's in the mugs that we sell in the Teespring store. So that's his story, Billy. And unfortunately, the last few months, he's gone blind. And that's not unusual for Shih Tzus. But he's doing well. He's really healthy. We walk quite a bit now. He used to go out in the garden a lot before he could see. But as he can't really see where he's going, I try to take him for more walks outside now, because I can lead him to the walk. So yeah, that's Billy. And before we go into the Fed, I like to say, maybe I haven't been talking too much about it, but one of the main objectives of my channel is to inform the public, not only in the United States, because I'm in the UK, but all around the world, of the evils. And I use that word because, in my opinion, it is. The evils of central banking. The evils of having a small group of people controlling the money and the currency of a country or of the world. And how do they do that? Well, they do it through capture of the government. And that's why I think it's important more than ever to try to let people know what the Federal Reserve and other central banks are all about. And I will reference some books that you might think are that I'm pointing at people, and I might be pointing at people in specific families. But I'd like to say that the most important thing to learn from this is not to be personal, but to learn that there's something better, that we can have a better, actually non-system. We can have a free market where money is just like any other commodity, and the most marketable commodity, of course. So I'm going to start, and I'm going to have a sip of my coffee. This is one of my best sellers. Well, it's my best seller in the Teespring store. It's an End the Fed mug. It's a bit worn out. I've had it for many years. And it says, robbing Americans since 1913, End the Fed. As you can see, I'm going to have a sip. So why today? Why am I speaking about the Fed today? What made me want to speak about the Fed and expose the system? And as I said, yes, Jay Powell is in charge and everything, but it's the system, right? Well, yesterday I saw a Fed president, St. Louis Fed President Bullard. He came out and said, oh, we're going to start running off the balance sheet right after the first rate hike. Running off the balance sheet is like actually decreasing, selling assets in their balance sheet, the Federal Reserve. It's like really tightening. And he's talking about doing it this year. Propaganda, I would say, because after the '08 crisis and all the QE they did back then, they only started running off the balance sheet in 2018, and it created havoc, of course, as we know, in 2019 and 2020. So now he's saying they're gonna do it this year, 2 years after the 2020 crisis. So that's one of the reasons, because the Federal Reserve is just a propaganda machine, and they're basically misinforming the public, trying to make the public think that they're there to help them. And I'm going to try to prove to you that that's not true. The other thing they're saying is that they started tapering in December. But if you look at this chart here of their balance sheet and the latest data that was published very recently, they did 115 billion of QE from the beginning of December to the beginning of January, so about a month. So that's 5 billion less than the 120 billion originally that they announced in 2020. So they've only tapered by 5 billion. They told us originally they're going to taper by 15 billion, and then in December they said we're going to increase it to 30 billion. So they're totally misleading the public. I won't use another word that starts with an L, but you can, you can figure it out, right? So the book I'm going to start with is a book that was recommended by Jim Sinclair of JS Mindset. He was known as Mr. Gold in the bull market of the 70s and early 80s. He was born, though, James Seligman. And yes, if you read this book, you will know who the Seligmans are. And the book he recommended many years ago, and I took the time to read it, and I've read it a couple of times, is, well, it was a #1 bestseller in New York Times. Our Crowd, The Great Jewish Families of New York, by Stephen Birmingham. So there you go. Highly recommend it. You can find it, I guess, online. And am I trying to be anti-Semitic? No, this is just the title of the book. And the gist of this book is that, and these great Jewish families of New York, they didn't come to the United States after World War II, you might think. No, they came throughout the 19th century. The Seligmans were one of the first ones to go to the United States in the 1830s. And then there was a wave, year after year. And they're mostly German. And the term "our crowd" is a term that these families used when they used to speak to each other about other people, and when they're going to have a big party or bash. And someone would say, well, why don't we invite those people? And there used to be an old lady back then who coined the term, I guess. She said, they're not part of our crowd. So who is our crowd? Well, they're the big banking business families of New York, Jewish families of New York. And some of them started out from nothing, like the Seligmans. They were peddlers in Pennsylvania and others, but they came to have a lot of power. And so I highly recommend this book so you can understand about the Federal Reserve. Yes, you might be asking, what's it got to do with the Federal Reserve? Well, that's the thing about books, and why sometimes it's great to read it more than once, because you find things that you read the first time, but you didn't really put two and two together the first time, and then the second time you do. And this is kind of an example of this. It's on page 40, and it's talking about someone who went, one of the great Jewish families who went to New York, and it was an individual who went on his own in 1837, when you had the Panic of 1837, and his real name was August Schonberg, and he started out as an apprentice at the Rothschild banking house in Frankfurt. And there are rumors, of course, that he was an illegitimate Rothschild, and they sent him, and he went to work for them when he was very young, 13 or something like that. And then they sent him to the United States, but he went to the United States as Auguste Belmont. Schonberg means a Belmont in French, a pretty mountain, a beautiful mountain. So he changed it to Belmont. It sounds less, I guess, Germanic, sounds more refined, right? But this is what it says on page 40. In the Panic of 1837, Belmont was able to perform a service which he would repeat in subsequent panics, and which helped make him a friend to bankers and to the United States government by negotiating large loans from the Rothschilds. He was able to shore up United States debtor banks. In other words, he was able, thanks to the hugeness of the Rothschild reservoir of capital, to start out in America operating his own Federal Reserve System. So when I read this, I think it was a couple of years ago when I read it the second time, it just clicked. And I'm just going to recommend some other books about that are related to the Fed. Of course, there's The Creature from Jekyll Island by G. Edward Griffin. That's a very popular one. It talks about how the bankers from New York went down to Jekyll Island in Georgia. Very private affair. They had to. They didn't use their surnames when they went on a private railroad car from Hoboken Station all the way down to Georgia. It was very hush-hush. They're trying to create, the blueprints for the Federal Reserve, so they had to keep it quiet. So highly recommend that. The other one that I highly recommend, and it's actually the original book really about the Federal Reserve. Some might think it's The Creature from Jekyll Island, but it's this one here, The Secrets of the Federal Reserve by Eustace Mullins. Recommend that. The other one I recommend is The House of Morgan, which I read even before I started looking into central banking and sound money. I read this like back in the 80s. It's a very good book, and it shows that JP Morgan Bank is not really an American bank. Its origins are in the city of London, and a guy called George Peabody. And some people suspect that the Peabody JP Morgan Bank became so big because it was used as a front by the Rothschilds, because there's still a lot of discrimination back in the 19th century. So they used an American name. And of course, they went to the United States later. The other one is The Empire of the City, The Secret History of British Financial Power by E.C. Knuth. That's very good. It's related to the Federal Reserve because all these families are related. And the City of London, JP Morgan, Peabody, and others, of course. And the other one is more modern day, I would say, and it's very popular. It's gotten a lot of people involved and aware of the Federal Reserve. It's End the Fed by Ron Paul. So I'm going to try to show you a few charts here and a bit of data that, in my opinion, show that the Federal Reserve is a wealth extraction machine. And what do I mean by that? Well, it's a wealth extraction machine from the general public to these very wealthy individuals. In A Creature from Jekyll Island, I think there's a passage in there where the author talks about how the men who were on that railroad car going down to Jekyll Island off the coast of Georgia, they controlled like 25% of the world's wealth. They represented people that control that. And I think that proportion now is a lot bigger than 25%. And the other thing I would say, there is, of course, the quote from Meyer Amschel Rothschild back in the 19th century. He said, "Give me control of the country's money or currency, and I care not who makes the laws." So there's another, how can I say, raison d'etre for the Federal Reserve and central banks. I would also note that centrally controlled credit, making all the credit of a nation centralized, controlled by the government or whoever, is one of the planks of the Communist Manifesto. Yes. And then there's, of course, the Gettysburg Address. What's that got to do with the Fed? Well, President Lincoln said that he said, "Shall have a new birth of freedom, that government of the people, by the people, for the people," right? "Shall not perish on earth." But unfortunately, with central banking now, we have government of the bankers, by the bankers, for the bankers. And that includes the big corporations, I would say. So that's what we have. And of course, there are NGOs or think tanks out there who help shape the bankers' control, like the World Economic Forum and many others. Bilderberg, the United Nations, I would say, is part of this whole game. So with that, I want to show you a chart that proves, in my opinion, the fact that The Federal Reserve is there to create booms and busts. And I'm not saying that without a central bank there won't be booms and busts, because there are. That's part of human nature. I've always thought this chart was really interesting, and it's from Gold Charts Are Us. I recommend you go to that website, goldchartsareus.com. But he's got here a chart, 200 years of the Dow gold ratio. And you might ask, how can he have a 200-year chart of the Dow if the Dow started only in 1896? Well, I guess he's extrapolated. He looked at stock issues going back to the 1800s. So this is, of course, the price of the Dow in terms of gold. And as you can see, up until the creation of the Federal Reserve in 1913, the stock market, as represented by the black line, the chart, did have ups and downs. You can see there's the panic of 1837 there. We topped in 1837, came down. That was a pretty big bubble. But if you look throughout the 19th century and towards the beginning of the 20th century, it wasn't, the market stayed within that green channel. There was, of course, small booms and busts, but after the creation of the Federal Reserve, you can see how the booms and busts are getting a lot bigger. Why is that? Well, because the central bankers, they've got control of the currency or money supply. They can create it out of thin air. They can lure the public into it and then pull the plug, because they've got control of it. They can pull the plug whenever they want. And how do they lure the public into the stock market? Well, they give them leverage, and this group of people, the bankers, the big corporations that control everything now. They control the media, of course, the CNBCs of the world and everything. They hype up everything, and then they pull the plug. And if you know when things are going to happen, you can get out, and the majority of the people will lose everything. And then these people will go and buy everything for pennies on the dollar. And that's how they've extracted all the wealth from the public. And of course, prior to the Federal Reserve, there were booms and busts, but they were not as bad. And I would argue that this has been the last century since the Fed was formed, has been the greatest wealth extraction experiment, not just in the United States, but throughout the whole world, especially after World War II. So the other thing I want to do here is recommend a few people that were very critical of the Federal Reserve. I'm not going to go through it very in details, but you should Google it. Charles Lindbergh Sr., Google that, Federal Reserve. He was a great opponent of the Federal Reserve. And he was a congressman from Minnesota right when the Federal Reserve was being created. He was in office from 1907 to 1917. I'll just give you a quote that one of his quotes about the Federal Reserve. He says, "This Federal Reserve Act establishes the most gigantic trust on earth. When the president, Woodrow Wilson, signs this bill, the invisible government of the monetary power will be legalized. The worst legislative crime of the ages is perpetrated by this banking and currency bill." What's ironic about Mr. Lindbergh Sr. is that his son, of course, the famous aviator, Charles Lindbergh, married the daughter of one of the most important partners at J.P. Morgan, but that's another story. The other individual from those days that I recommend you Google is Lewis Thomas McFadden. He made a great speech about the Federal Reserve. Just Google that. So, and to finish off here, I'm just going to show you something from the Federal Reserve, data from the Federal Reserve Board of Governors. They've got the wealth distribution of the United States. And if you go back to the third quarter of 1989, the top 1% owned 23.6% of the wealth. The bottom 50 owned only 3.7%. And if you go to the latest data, the top 1% now own 32.1, and the bottom 50 only 2.5. So that's what I mean, wealth extraction. And if you look at the top 10%, we're almost up to 70%. So the Federal Reserve, they usually come out and say that their mission is price stability and full employment. So I'll try to discredit that again. If you look at this chart of labor force participation rate, and this is from the Federal Reserve again, if they really were working on full employment, how come we're not nearer 80, 90, or 100%? Labor force participation is 61.8, and it's way below the highs that we saw in the 90s and early 2000s. Yes, I think the growth in the 60s and 70s was because of women coming to the labor force. I don't think it had much to do with their policy, but nevertheless, if they really were looking for full employment, why isn't this percentage much higher? The other thing I would say, the stable prices. Many of you have seen that since the creation of the Federal Reserve, the value of the dollar, the silver dollar, for example, what you could buy with a dollar in 1913, you can only buy a few, you will only get a penny or even less worth of goods today. And this other chart from the Federal Reserve shows that they don't want stable prices. Prices have been rising. Here's the CPI, really at an accelerated pace since 1971, of course, when Nixon took the United States off the gold exchange system. So there you go. That's why we need to keep informing the public about these things. And people have to do the homework themselves, read the books like I've read. 25 years ago, I knew nothing about this. And it's just through reading and studying and listening to other people, of course, like Jim Sinclair, who recommended our crowd, right? So with that, let's quickly look at where the markets are. This morning, it's 9 a.m. London time. We've got spot gold at $17.90. It's down just over $1. Range has been $17.87 to $17.93. Silver is down 3 cents at $22.15. Low has been $21.99, just like yesterday. So it looks that it's holding that 22 level. The high, $22.24. The Dow future is up 18. The NASDAQ future is down 66, and the S&P future is down 4.5. Of course, today we got non-farm payroll, another important economic data. We'll have to see how that comes out. Again, these numbers are highly doctored, and I would say the government and the Federal Reserve work together to tweak the number to make the algorithms behave in a certain way. We've got the FTSE unchanged right now. We got sterling up 0.1% at 135.47. The euro is up 0.1 as well, 113.11. Dollars unchanged versus the yen at, let's see, 115.78. And the dollar is down 0.25% versus the Chinese yuan, 637.92. Aussie dollar is down 0.2% at 71.50. The dollar is unchanged versus the Canadian dollar, 127.20. And the Kiwi dollar is up slightly at 67.50. To the commodities, We saw oil yesterday, WTI crude, motor ahead. We're almost near 80. We got up to 80 overnight. That's the high. Right now we're at 79.50, up 2/3%. We've got high grade copper up 0.4% at 437. And I saw that Jeff Curry, the commodities head at Goldman Sachs, said yesterday that we're in a super cycle, bull market in commodities. And he focused on oil, of course, didn't say anything about gold and silver. Gold and silver, of course, are commodities. Gold is mostly a monetary commodity, and silver is both monetary and industrial. So, bond markets. Of course, we've been looking at that quite a bit recently. Yields crept up yesterday. I think the high was 1.75%. This morning we are at 1.73. So the key level on the upside is 1.77. I think we could see volatility in the bond and stock market after the non-farm payroll data, which comes out at 8:30 a.m. Eastern Time or 1:30 p.m. London time. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day and a great weekend. Take care. Bye.